Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, May the 14th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal. I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. It's a pretty light week for the most part. Across the pond, not a whole lot to see there. Here in the United States, actually, Great Britain did have average hourly earnings index came in at 3.2%, which was lower than the expected 3.4%. Unemployment rate was a little bit lower, though, in Great Britain. And then we come back here to the United States. We have the NFIB, which is National Federation of Independent Businesses. It's basically a small business index, and it rates their confidence in the overall economy, and it came in at 103.5, expected to be 102.3, so better than expected there. Small businesses doing good. That's what I want to see. That's velocity of money there, guys. If it goes to one big company or one big organization, you don't see that velocity money, but these little small businesses, if they're doing well, that money is being dispersed in a much more vast way, if for lack of a better way to put it. But you can see that small businesses would all spend their money much differently than, say, a big box store. All right, so that creates velocity money. That's what I would like to see. And then we also have several Fed governors speaking. Williams, George, I think are the ones that are speaking. And then we had importer prices coming in lower than expected, which is expected as far as I'm concerned. Came in at 0.2%, expected to be 0.7. We haven't been seeing inflation across the board, so why would we see that that number come up? And something to note, it's not one of the major economic data points. Why? Because it's a lagging indicator. So, all right, let's move on to the overall markets. We've got crude oil right now, slightly in higher territory, holding on to those 60s. That is a psychological level that is acting as support, $60 a barrel. So we don't have a Fibonacci line coming up anywhere in and around that 60 area, but you can see it's obviously acting as a support just as the market comes down and bounces on that a little bit. So we could see that acting as support going forward. Sorry, trying to find my little pin thing here. It kind of is a bit difficult to see every now and again because it turns up. It's so small. There it is. I found it. All right. So doesn't want to work for me maybe. All right. So there we go. We got it finally going. There's my pen. So right here at about $60 a barrel, you can see right in here, this is acting as support. You can see it's maybe even the 200-day moving average, one could say, but they're lining up very closely. And I think that the closer the market gets to that $60 a barrel area, that's where we start seeing that support come in as they're trying to defend $60 a barrel. So that is more of a psychological level that we're going to have to keep an eye on. Like I said, it doesn't line up with any Fibonacci, the market profile, or anything else. It's just a psychological level that everybody is going to be keeping an eye on. And then we go over to the gold futures. Gold futures looking a little toppy. We're going to see some more of this show up in GLD and GDX is what I was looking at. I was looking at gold being a little bit toppy here, coming off. The rest of the broader equities are starting to rally. Remember, I talked that this was a flight to safety type of trade where people were pulling out of the equities yesterday and throwing it into gold. Well, I think today you're going to see some people covering some of those gold trades and throwing it back into the equities as we're seeing somewhat of a rebound here in the equities right now. But that 1,300 psychological level here over in gold is not holding as well. We got above that yesterday, settled above there. That was a coup for the bulls, but today it is a lost cause. It looks like it's rolling right back over to come over to the point of control here. So now that we are below that 1,300 area as a psychological level, I think we're going to see this roll over and test the 1280 again. And then we go over to the bonds. Bonds they started extending themselves outside the value area high. This is the area we're talking about for the value area high. We settled above there. That's usually when we look to see the markets getting overextended, a little overdone to the upside. Now, remember, as bonds go higher, this means that interest rates they're looking for interest rates to start to go down, all right? I don't think that they're going to lower interest rates. Fed fund futures are pricing in about a 70% probability of a Fed fund rate cut in December, heading into that holiday season. That is going to be really dependent on what that economic outlook looks like going into that number. And this far in advance of that meeting, it really doesn't hold that much weight, to be quite honest. I mean, that's still well over 6 months away. Nobody really can predict the economy that far in advance, unless you're throwing darts and just picking one of them. All right, VIX, we're starting to see come off a little bit today, out of those 19s, but still in the teens, which is what we want to see. That's because it's a product of this. We've got the Dow Jones Industrial Average up 250 points here on the day, and if you look at this, it is breaking above where we opened yesterday, which is a nice move. That's making it look a little bit more like we found a bottom. I talked about this though for weeks now, that we were going to come down and test the point of control here and maybe then rebound back up and away, test that value area high again. That's looking like what we're starting to see here. Sometimes we could see it get a little overextended to the downside here and test this area here. I don't think that we're going to see that. I don't think the economic data coming out is really showing that that's where we should go. Yes, the tariffs are going to be a burden on the overall economy, because that is going to cause downward pressure as it's a tax on the economy. Kind of like what I talked about with oil, how that kind of stifles the velocity of money. These tariffs will as well, but it's on a broader group of products that we all buy, so it's not going to hurt it that bad. We are going to have to pay up for some of those products though, and get taxed on it, which I don't think is a good thing, but I was wrong about the first rounds of tariffs as well, so we'll have to see. All right, Nasdaq moving higher nicely by over 100 points, back to the point of control again. We've talked about this several times, where the market, as soon as we got back inside of this value area high, I talked about it, we're going to be looking to go back to the point of control. I was looking for us to actually test this level right here, which lines up with the 50 Fibonacci and the the 50 Fibonacci extension, and about the 100 or something. I don't know what the other one is, and it doesn't really matter because they're all lined up. The 0, the 100, we got going down as an extension to the downside. So those lines are a major support area that we're going to be looking for in the Nasdaq there. All right, E-mini S&P is breaking back above this 38 Fibonacci, and I thought once we got below this 28.33 area, I talked about that, it looked like for sure we were going to go down and test 27.34 before it was all said and done, or at least the 200-day moving average, which lined up with 2,800. This I thought was a for sure thing, that we would test 2,800. It's a psychological level. It lines up with the 200-day simple moving average as well, right there. All of those things seemed like that's what we were going to do. Come back down, test this, and have the point of control slide a little bit higher, which would start to indicate that we were gaining acceptance at these higher levels. I think that that's a good thing for the markets to kind of get those kind of levers and pulleys going. I don't know if we're out of the woods yet. We could easily see this market settle off at the end of the day towards the lows, but that again will even still make this doji here, if we sold off near the lows, kind of look like one of these, which is a bottoming pattern. If this, kind of did one of those, something like that, or even if it was in red, we could see this, if we sold off to the lows of the day, we would have a really long wick and it would look like that. So all of those things being said, we could easily see this, even like that coming down to the 200. That's what I was kind of expecting this chart to set up for. And then after seeing that, then we would get that kind of bullish move to the upside. Doesn't look like we're going to get that clean of a pattern, but I feel like it just needs to go down and test that 2,800, get that point of control to pop a little higher. Now, obviously, we gained a lot of acceptance up here that we could see that move as well. But I'm a little surprised we didn't test 2,800 in the E-mini S&Ps before we really started making that turnaround. All right, let's look at the daily chart of the E-mini S&Ps on a breakdown with 30-minute candles. Each blue section is a day. This is gray stuff, is in the overnight session. But you can see we've bounced. Overnight inventory got long. Usually I talk about overnight inventory when it gets long. They try and flush them out during the day session. They haven't done that yet. So we've got this low printed in overnight. It's not a true number. And a lot of times before we make that resumption to the upside, we try and print some of those things in the day session. But today, no attempt to really flush out those overnight long, the inventory overnight overwhelmingly long. We aren't seeing them get flushed out at this point. Days are not over yet. We could, like I said, see that kind of move to the downside, create that bottoming pattern with the chart setup. But at this point, market's moving higher. Doesn't look like we're testing 2,800 in the near future. So it might be a resumption that we have to come back down to, but at this point, we are not seeing that right now. All right, GDX, or actually GDX is what I was looking at. When I was looking at my watch list going down to the side, saw that they had pretty decent implied volatility percent and went into the platform and bought GLD. Or actually traded GLD. So I went in, saw the high implied volatility in GDX, went over to GLD, saw this chart set up with this spike. You know, basically that's a shooting. Sorry, I don't know if that flashed for you guys, but this shooting star doji here kind of got up and away. I was looking at it. It's coming right back down to the point of control here where the most time and volume has been spent. So it looked like a great chart setup. The market looks like it wants to roll over, settle down around the point of control. Remember when we talked about this with the magnet? As a matter of fact, I'm going to do a different magnet. So we've got our magnet here. How's that? Trying to draw the market back down to the point of control is what it's looking like right now. So with this magnet, the market should want to roll back over to the point of control here and settle down. So all of those things being said, looking at GDX, not checking the implied volatility percent for GLD, which I got stuck in my head, I ended up going in and selling some calls. So I broke my rule on that. So we're going to be looking at this as a yellow light, really tight stop, if you will. Anything basically looking like we're going to get above this level right here. So 123 in the GLD, I'm out. I sold some calls in there in the monthly. So I went in and sold the June. I sold the June, what was it, the 125s, I think. The June sold the 125 calls, yes. So June 125 calls in there for 70 cents, almost right off the open. If the market, I'm going to be out if we go above the 123 area. That's going to be my out. I'm not going to ride this one. So 123, I'm out. And I'm looking to get out at 50% of max profit. So 50% of max profit, 70 cents is my thing. I'm looking to get out at 35 cents is my out when we're trading around 35 cents. So the June 125 calls, I sold those. Doesn't really fit my rule. But that being said, the chart setup and all of those things, I'm going to go with it despite the fact that that implied volatility isn't in my favor, but a break above 123 breaks my chart pattern, and I'm pulling the ripcord. All right, that's all I've got for you guys. Later on this week, we're going to be doing a couple of webinars. One, I'm going to be doing some basic option strategies for Westmark. That's going to come right before my webinar in the afternoon, where we're going to come up with an assumption, a market directional assumption, and then we're going to look at what that assumption is for, let's just say if it's an XYZ. If we're looking at XYZ, we're going to say, oh, we're bullish, and how do I set up a strategy for this? What is the right strategy? We're going to go through some of those steps, because that's usually the thought process we go through when we're setting up a strategy. It's not always we're looking at, like I did with GLD and GDX, is just go straight for the high implied volatility, wanting to sell some premium in anything, and go with that. This one, I'm looking at XYZ. I'm saying, hey, I'm bullish, and what's a great option strategy for this kind of theory? So we're going to go through that and go through those steps in order to discern what strategy is the best for that type of environment and your assumption. All right, so check it out at protraderstrategies.com. If you can't take that, take it easy.